Guys, we're back here. Yo, technology is going to be the death of us, but we are here. Hi, Leander. I can't even see. Hi, Nomi. Um, Guys, I'm going. I'm going. We're having struggles with the speaker here. But the crux of the matter is that we're going to discuss some of the things that you need to look out for in terms of debt when you're still alive. Things you need to consider. For instance, car finance, mortgage. What are the things that you need to consider on a financial advisor's perspective? Because even though, okay, there we go. So even though we do have this issue of a fluctuating interest rate, we still want to take out car finance and we still want to take out a mortgage. But one thing we want to understand and know is what's the best and sensible way to do this. So in case you're that person who wants to, or in case you are in a debt that you just want to get out of, this is the place for you to be right now. Okay. Nomfundo, are you ready to resume?
Hi, Yolanda. How are you?
I'm good, thank you. Can the
I'm
viewers
good, thanks.
hear Nomfundo? Because I can hear her. I just want confirmation from anyone who's on the live to confirm if they can hear Nomfundo here before she can start.
We can hear. Okay.
Cool. Perfect. So the floor is yours.
All right.
You'll answer the questions that people have once you've done your own presentation. Okay, great stuff, guys.
All right. Thank you. Thank you very much for having me. My name is Numfundo Mabuza. I am a financial planner. I also have been in the banking industry for a couple of years before I became a financial planner. So I'm not going to go into too much depth. I'm not going to go into too much detail. I'm just going to give you guys the general perspective with regards to debt, especially with regards to vehicle finance and home loans and just managing your bank account as a whole. The first thing that I'd like to start with is then when you open a bank account, when you get a bank account, we have so many options available. It's not just a bank account. Make sure that you get something that is tailor-made for you. This is not a blanket approach, a one shoe fits all. So when you're going to open a bank account, ask questions, have the conversation with the person that's assisting you, ask as many questions as you need to know. Make sure that you understand how your bank account works. Number two that I normally advise people to do is check your bank statements. Often we tend to ignore your bank statements. Go through your bank statements and know what you are paying, know the bank charges. Just go through it and just have a look at what is going on. So you do find instances where some people set notify me's for below 100 rand that you don't get notified. So go through your bank statement and just have a look and see that what is going on with your bank account. Make sure you can account for each and every cent that goes out or comes into your bank account. Now, with regards to purchasing a home loan or purchasing a vehicle or going into debt. So with regards to vehicle finance, I'm going to start with the vehicle finance because that's the common one. And I think we see a lot of people now taking back their vehicles with
Nomfundo,
yes,
sorry to break
yes,
you right there. Is there music playing in your background?
no.
There's no
Not
music.
me.
Okay.
Mm-mm.
Sorry, Shares, it's not us. Okay, you can continue.
All right. So when purchasing a vehicle, right, the first thing they're going to ask you when you do the application is to send through 3 months bank statements. So before you send through those 3 months bank statements to the bank, take them for yourself and sit down with them. Go through them yourself. Have a look at them and have that conversation with yourself, an honest conversation with yourself, and highlight, okay, this is the money that comes in. These are the basics. These are my expenses. After that has been done, how much do I have left? Now I'm going to bring in this obligation that I need to pay and need to make sure that is honored every month. Do I have enough for it? Take into account things like the general maintenance of the car, of the car, the service, things that would be outside your service plan, even if you have it. Take that into account, as well as your insurance. Another thing that we normally would advise people to do when you decide that now you would like to purchase a vehicle, you go to the dealership and they do an application for you. Sometimes, not always, sometimes you would find that a particular dealership has a particular agreement with a certain bank. So they would send through your applications to different financial institutions and get the different amounts back and the different interest rates. But then they would tell you that, Bank A declined you or Bank B declined you. Only Bank C approved you because they have an agreement with them. There's a certain percentage that they are getting for themselves. So, but if you get yourself the OTP and go to the bank and do the application for yourself with the different banks, then you can then get a straight answer. It is not a blanket approach, like I said. It's different for each and every individual. So what works for one person won't always work for the other person. If you have a deposit, it really assists, especially if your credit score is low. Having a deposit with you does assist. So now when you've got the car, you bought the car, you've been approved and you're happy with your vehicle, and then things start going sour as it happens. What do you do? The first thing that I would say is, please do not reverse the debit order. Do not reverse a debit order. As much as at times you are pressed into a corner, and I understand, I've seen it happen. It's just one of those things that happen, that you find yourself in a situation and you're like, you want to go to the bank and reverse the debit order. Do not. Go to your financial institution, go and speak to them, make arrangements in the beginning. When you can see that now it's getting hard, do not wait for that moment where now you are in arrears, because it then becomes even more difficult. You are in arrears and now they are calling you. So make that effort to go to your creditors, sit down, call them. I know it's tedious, because when you get there, you go to the bank and they tell you, no, we're going to put you on the line. You're going to wait at the line, on the phone, the music. It is a process, but do that. Institutions prefer for you to come and have a conversation with them. Tell them, look, I'm having financial difficulties. Can we please lower the installment? Can we please extend the terms? Have that conversation and ask them to be transparent with you. Ask them to explain to you what is going to happen now that the installment is lower, the term has been extended. What is the implications on the interest and all of that? Do ask those questions. Do not just accept them saying, yeah, we'll reduce your installment, and then you are done and then you're happy. Know what you're getting yourself into sooner than later. Even which with the purchasing of a house, you get your 6 months bank statements that is requested by the bank. Take those 6 months bank statements, sit down with them, have a look, do your own calculation first. Just because the financial institution tells you that you've been approved, you qualify, does not mean that you can afford it. Do you have the contingencies in place that should something unforeseen occur within that, you'll be able to still survive? Don't just go in with that approved. Even with the personal loan, go through, do your shopping. I always say that when we buy our groceries, we compare. This is a special that even when it comes to taking on such obligations, shop around. Shop around, go for obligation-free quotation, shop around. You don't have to take the first option that comes to you. Shop around and know what you're getting yourself into. When it comes to your home loan, there's things like your transfer cost, your attorney fees. When you are having that conversation, ask them to be transparent with you with regards to that. Know what you are getting yourself into. You don't want to find yourself taking a home loan or a personal loan or a vehicle finance and then having to add debt on top of that. I'll give you a quick scenario. When I first bought a car, 2 weeks later, I got into an accident and the excess on my insurance was 16,000 Rand. I didn't have that. So I now had to go and take a credit card on top of just purchasing vehicle finance. Just because they say you qualify for it does not mean that you can afford it. Once you have settled all your basic necessities for the month and you find yourself with less than 30% of your income left behind, before you get into any financial obligation, ask yourself, can I afford this? Is it really going to work for me budget wise? Once I find myself in this situation, will I be able to handle it? Cars come with tires and all those other things. Even with regards to purchasing a house, sometimes the things break, the maintenance of the house. Just have that honest conversation with yourself and ask as many questions as you can before you commit to something as that. Ask as many questions as you can, even with personal loans. And I would also just like to say, please, no matter how hard it is, no matter how difficult you in a situation you find yourself, do not go into debt review. Do not go into debt review. Speak to your creditors, make arrangements. Do not wait for yourself to go into arrears, then now you're in arrears and then I would like to make arrangements. No, you know that you know when you are facing a tough time. You know when you are pressed into that corner. Go as soon as possible. Don't wait for things to escalate to the point where now they're issuing you with sections 129 and all of those things, and you find yourself pressed, and now you are getting letters of demands, you are being called. Just be honest with yourself. Be honest with yourself with regards to getting into any financial obligation, whether it's a personal loan. I know sometimes now they've made it so convenient. You just log into your app and then it shows you pre-approved. But just have that honest conversation with yourself. The 3 months bank statement that you're going to send to the bank, no, first sit down with it, then you go through it, see what you can do, plan. The way they're going to check if you qualify, check if you qualify before you go to them. So that's what I would just like to say about that. And go through your bank statements, get a first, a second, and a third opinion. So yeah, thank you, Yolanda.
Okay, thank you so much, Nomfundo. Don't leave us yet. We have a couple of questions we're going to ask you. Thank you so much for that. That's quite informative. But now, as you can see, the interest rate is going up. There's a lot that's going on. There's a question right here that's being asked. But before that question, one thing I want you to clarify for me. Why is it that you don't advise people to take debt review and you rather say that they must try to renegotiate to pay maybe a much lower debt with their service provider? And secondly, once they renegotiate, let's say they go to their creditor and they renegotiate, what are the effects normally? Just generally, what are the effects of that on the debt itself, and how is it going to affect the person? Then we'll move on to the other questions.
All right, Yolanda. First, I'll start off with a debt review. These companies that you would go to and join for the debt review, they also have fees that they charge you. So you would find that you are paying an installment of 5,000 Rand a month, and they are not even paying your creditors half of what is due. You'd find that they're only paying your creditors a quarter of what is due, and they have their admin fees and their legal fees, and it's a lot of fees that's on that statement. And then at the end of the day, the creditors that are supposed to be paid are not even paid half of the amount that they're supposed to be paid. So you'll find yourself paying debt review for 3 to 5 years, only to find that you're not even paying half of the debt. But had you made arrangements with the creditors, it would have been much better because you would be paying the money directly to them. That's why I say go to your creditors before you find yourself in a point where you are issued with letters of demand.
Okay, thank you. That I didn't know. So that's informative. So, second question. If I cannot afford this debt anymore, and now I go to renegotiate, I go speak to the bank, I say, or whoever is my financial or service provider, financial provider, and I say to them, I cannot afford it, can it be lowered? Well, how is this going to affect my debt? Is there anything that increases or decreases? What will it mean, even for the term of the payment?
Right. So with that, they would it would depend on obviously the different situations because it's not like a one size fits all. But what usually happens is that once you go to the bank and ask them to reduce your installment, then you would have a discussion with the bank. Do you want it to be done for a certain amount of time? Do you want it to renegotiate the entire term? So if it's only for a certain amount of time, they would tell you like 3 months. They would add the 3 months on top of your initial term, and then they would tell you if they will interest the how it will affect the interest. But if you're now renegotiating the entire term, with some institutions they'd have to now like redo the whole application with the lower installment and then tell you, okay, from now on this is going to be your new installment for the whole term and this is going to be your interest. So that's why I say it's very, very important to have the conversation and not just accept what they tell you at first glance. Have the conversation and ask them, what are my options with regards to making arrangements? I hope that answers your
Thank you,
question.
thank you. That is a helpful question. I'm trying to wear something. I got a warning about this that I shouldn't wear colorful clothes because people can't see the comments. So now I'm going to wear this green jacket. Hopefully, it's going to cover so people can see. Um, they can see properly. Thank you so much for that. I mean, what you're saying now, in essence, means that this could be an advantage for the person that's actually going to the bank or a disadvantage to some extent. Because if I'm hearing you correctly, what you're saying is that if you're going back to the bank to say, I cannot afford it, let's renegotiate so that I can pay a lower fee. So what you're saying in essence is that possibility is that the interest rate may increase and the term may actually increase. Did I hear you correctly?
Yes, yes. It with different institutions, each institution has their own way of doing it. But yes, that is also something that does happen when you go to the bank and ask them. It's like you're asking them, look, lower my installment for the entire for the remainder of this term. I can't afford it now. I need it to be lower. And then they will tell you, okay, we're going to lower the installment, increase the term, but we're also going to increase it. This is how it's going to affect your interest rate as well. So just ask them to be transparent with you. Do not just accept them saying, yes, we'll lower the installment and we'll extend the term and that's it. Also ask the question of the interest rate because I've found that a lot of people do not ask what is the implications of the interest rate. You just now relieve that, okay, it's going to be lower, but what is the effect on the interest rate?
Great stuff. This is very useful information. So, guys, I hope you're taking note of all of these things, more especially if you're not aware of them, what the benefits are, and. So, let's go to the question that I dotted down. So, you said before people take out such debts, they should actually shop around. And someone was asking, doesn't the shopping around dent the credit score? Because one would think that if you constantly are asking for a loan somewhere, it's probably going to have an effect on whether or not they approve you. Will that be the case?
No. No, I know that's what we are. We people are told that if you keep going, it's like you are told that no, if you go to this bank, that's exactly what the dealership does. They're going to take your applications to bank A, B, C, and D, and then come back to you with the reply. The only difference is that now you are doing it yourself. You are going with the OTP instead of allowing the dealership to do it for you.
Okay. Okay. Got you. I've got you there. I am definitely covered on that. So the shopping around is not going to dent um it's not going to dent you being able to get a loan. So I'm going to read some of the comments or the questions so that you can answer them for us. So the next question is okay, that's a comment. So this one says, why are we advised to take clothing accounts and credit cards to improve our credit score?
This is a very common, yes, this is something that a lot of people are told to do when you are like fresh from varsity, just graduated, new job, or if you're just someone who didn't have a lot of debt. So what happens is that sometimes the bank does not want to take a risk or a chance on you because you have no payment history. So they don't know if you are going to be able to afford to pay back this financial obligation. But if there's a track record of you paying that small clothing account, like your range, all the small clothing accounts, because with them taking them up does not really require a lot of documentation. It's quite simple to get a clothing account actually. So sometimes people are advised to get a clothing account just to create a credit score, just so that the bank can see that you are a consistent payer, you pay your account on time, you pay timelessly. With regards to that, what I would normally advise someone to do, if you are not someone who really needs a clothing account, take that clothing account to increase your credit score, but buy on cash with the clothing account, like pay money into the clothing account and use your balance, put it on a positive, so they can see that as much as you have that credit facility, but you are using your own money within that credit facility, so that you don't go on a minus or you don't owe. So it's just to have the credit facility. If you have the credit facility and you are paying it, so we can see that, oh, okay, this person is honoring their obligations. But if you're even paying more than what is required, if maybe your monthly installment is 100 rand and you're paying 200 rand, it's even better for your credit score. So yes, it does build up your credit score. Cell phone contracts and clothing accounts.
Perfect. So you're building literally some sort of track
Yes.
record for the financial advisor, I mean, for the
Yes,
financial
for the
service
fine.
provider.
Yeah,
Got you.
yes.
Got
If you
you.
are
So,
new,
okay, makes sense. So the next question is, when you are pressed, is it best to sell the car or take it back? And I'd like you to answer this question also from the perspective of an immovable property. Is it best when you are really pressed? Because with the current interest rate and how things are going, a lot of people are pressed, and some are even considering reverting back to the financial service providers to say, you know what, take this back. So what's the best option under those circumstances where someone can see that they can no longer afford this? Is it best for them to just sell the property or to take it back? And what's the effect of such, let's say you take it back, what are the effects going to be if you decide to do so?
so I'm gonna start with the vehicle. When you are pressed and you have come to that you and the financial institution can no longer come to an agreement with regards to this, maybe you've tried to make arrangements with them and it doesn't go through, and they're not allowing you to make the arrangements, and you're like, okay, you know what, I can't pay the arrangements, it's too high, I'm just pressed. You go to the financial institution and you can return the vehicle. You're allowed to do a voluntary return. You can tell them that, you know what, I am returning the car, I can no longer afford it, and you've tried to make arrangements and you see that you're really not coming okay financially, you are pressed, you have reached that point. Yes, do a voluntary surrender the vehicle. Then what they normally do is that they will take the vehicle, and then they look at the balance, they then sell the vehicle and try to make up the cost, and whatever is remaining after they've sold the vehicle, unfortunately you will be liable for. So if they take the vehicle and the outstanding debt is 100,000, they sell it for 50,000, and that's all they get, the remaining 50,000 you are still liable for. With regards to the property, the bond, with regards to property, it is not as straightforward as with the car. There is a way, you have the conversation with the bank. They don't just take away your bond and be like, okay, you haven't paid for 3 months and we are taking the bonds. You make the arrangements. But if you do find that the arrangements are quite difficult, it's quite rare for the bond to get to that extent. But if you do find yourself now, you are in that position as well with your home loan, you go to the bank and then you tell them, look, this is now too much for me. I can't handle it. And then what is the next step? Before the bank will come and say they are repossessing your house, they do have different plans in system depending on the different financial institutions. So, but that's why I would say communicate with your bank before they hand you over, or before it gets to the extent where by now we are at the repossessing of the bond. A bond is not like the car. The bond is a larger asset. So with that, banks do have processes and procedures in place to try, because even for them to just repossess your house, honestly, it is a loss and it is a lot of admin for them. So they do try by all means to assist you and get you in a place where you can pay off your home loan, either by extending the term and a whole lot of other things that won't really get into detail to. But with regards to the vehicle, you do take it back, they do sell it, and whatever is left, then you are liable for, unfortunately.
Yeah. Thank you so much for that explanation. Makes a lot of sense. I'm hoping that it's going to make sense to the person that actually asked the question here. So there's someone talking about a letter of demand. How does it work and what is the impact? I can answer this one if you would like me to, Nomfundo.
Yes, please.
Okay, guys, a letter of demand, normally you will get it if you are not paying anything towards your debt, and your creditors have been trying to call you, So a letter of demand, once you get it, you must just know that they are now in the process of approaching a court. Because remember, in order for them to repossess the property and go through all of these things, they need to have a court order. So now it means that they are starting the process, as soon as they send you that letter of demand and you still don't do anything, the next step for them normally is that they now will go to court to try and get whatever money you still owe them, which is outstanding. So that's what a letter of demand is. It doesn't really do anything really, but that's the first step of litigation. So I hope that makes sense. Nampundo, let me just read another question for you. Maybe we'll take a few before we let you go. Okay, I'm sure this one was answered. What are the implications of allowing the bank to repossess the car? We've actually heard what the effects will be. Okay, this one. Can one come out of debt review because of their high fees after 3 years, 4 years, and renegotiate? So the question is, can someone get out of debt review?
So now you've joined debt review, you've signed the contract, and you can see that these people are not really paying my creditors. Yes, you can get out of debt review, but it is a tedious process, because the company that puts you in debt review would then tell you that you need to pay there's amounts that you need to pay. Some of them would even tell you that you need to get a lawyer, an attorney, and then they will need to draft a letter. It is a tedious process to get out of debt review, but you can terminate the contract with them. Sometimes what usually happens is that you terminate the contract with the debt review company, but they don't remove your name. So if you go to a financial institution, you're no longer paying their premiums, but you still have the debt review hold on your name, which then can be problematic. And then they'll tell you that in order for them to remove that name, you need to send them letters showing that all the creditors have been paid.
Thank you for that. The other question is about home insurance cover. What exactly does it cover? Sinelak, yeah, probably you weren't here when we talked about this, but Nomfundo, if you'd like to, the floor is yours to answer her.
Sorry, what was her question?
So our question is, what is homeowners insurance or the cover itself, and what exactly does it cover? So let me answer this one, Sinelak. Maybe Novude has a problem on her side. So a cover or home insurance cover, it's like an insurance that's placed on the property. So if anything happens, especially with bonds, banks like to insist that you should have it so that if anything happens, this property is covered. If it burns down, it's covered. If someone who was paying for it passes away, it is covered. So that's exactly what it is in essence. It's meant to cover the bond. So that, because remember, when you pass away, the debt is still there, it still exists. So this cover then kicks in when you pass away, if you had it, so that it can cover the debt itself. So it's meant to cover the property, the payment that is still outstanding, or the debt that is still outstanding. Now, the only thing about a cover is this. Sometimes, not always, sometimes it doesn't really cover the whole amount. As with any other insurance, you'd find that there's a certain amount that it did not cover. But normally, this is an assessment that's done when you are claiming for this particular insurance cover. So you get the details of whether or not it's going to cover all of it. Sometimes you'd see that, okay, there's probably 1,000 or 2,000 or whatever the amount is that the cover didn't really cover in the debt that was owed. So that's in a nutshell what an insurance or home insurance cover is. Okay. Let's move on to the other question. What does it say? I think that one was answered. No, that one, Ramza, was answered. I heard, so this is another one. I heard that once the account is handed over for collection, as a client, I'm not obligated to pay.
No. You are obligated to pay. You are obligated to pay. Once you've taken the debt and it's yours, you are obligated to pay. Remember, you this is something that you took. Yes, now it's been handed over, but you are obligated to pay. You need to be in contact with the people that you've been handed over to and make arrangements with them. This does affect your name and it does affect your credit score. So leaving debt and being like, no, it will expire, and it'll just be like, people love to use this a prescription of debt. It's expired and it's gone into default, and let me leave it. No, pay your debt, even if it means that you're paying 50 Rand a month because you cannot afford it, but pay. Hand it over or not, pay your debt. And in a perfect world, we would just like to not allow your debt to get to the point where it is handed over, because now they're going to add all of these unnecessary fees on top of that, collection fees and whatnot. But pay your debt, make the arrangements. Yes.
Okay. So the next question is, what is prescription of debt, and what is the process? If you can, you can answer this for us, or if you'd like, we can also answer it as well.
You can answer it. I think this
Okay.
is more your thing.
So, guys, prescription of debt means that the debt which you are being collected for, or they are trying to come after you for, has prescribed. So if, for instance, you had a debt 5 years ago and you stopped paying it 2 years ago, and then 3 years later, after you stopped, someone comes and says to you, I'm here to collect that debt that you made 5 years ago. That debt has prescribed. Someone cannot come and collect. That's what we call a prescription of debt. You don't apply for a prescription of debt. But what happens is that when someone comes to collect, you just notify them that this debt has prescribed, and therefore they can't collect on you. They can't collect on you. They can't do anything on you. I mean, even if they try to sue you, if you can show that the debt has prescribed, there's nothing that they can do about that debt. So even though this is the case, I know some people don't want to pay because they think that if I delay until 3 years later, probably this debt is going to prescribe. It's not always the case. You must just be careful. The debt prescribes when they don't say anything. They don't collect. They don't send you letters. They don't write you anything. You also don't respond. You don't acknowledge the debt. You just sit there and do nothing. So some people will think that a debt has prescribed just because it's been over 3 years since they haven't paid. If they have been sending you letters of demand, they have been calling you, or alternatively, you acknowledged that I'm going to pay. I'm going to pay. You acknowledge the debt. That debt will not prescribe. As soon as they talk to you and you also, for instance, talk to them about this debt, it hasn't prescribed. Prescription of debt means that you owed someone 3 years ago. They didn't say anything in the whole 3 years. You did not say anything. You did not communicate to say or acknowledge the debt, and they did not, bother to collect from. That way, the debt then prescribes. So there's no process of literally just saying, I'm going to apply for a prescription of debt. Normally, these people, whoever it is that comes for you, will try to collect. That's when you will invoke prescription of debt. Okay, so let's see. Nomfundo, tell us how much time you have so that we can just cap it on the questions there, so that we don't keep you too long.
I have 5 minutes left. 5 minutes, yes, I have 5 minutes.
5 minutes left. Maybe we can do 2 questions. Okay. Okay, these are like, I don't know. This is okay. So there's a question from TYN. He's asking, can I negotiate the interest on a loan after 1 year of this debt?
Yes, you can. If you've been paying your monthly installments on time, if you have not missed a payment or you are not in arrears, you definitely can go to the financial institution and have a conversation with them and ask them to renegotiate. It is possible, yes. Sometimes what they just be careful, they would say to you, they are going to renegotiate it for you, and then you find that it actually goes higher. So it's something that you can do, but when you go there, like I've said in the beginning, just ask as many questions as you can and make sure that you read. I think I saw a comment here saying, read the contract, read through the document. Do not just rush to that e-sign thing and say, okay, they've renegotiated. Okay, fine, they're showing you the final amount. Yeah, this is how it looks now. The interest is lower. Go through it and see, read word for word if it's possible. You're not under any pressure. I know sometimes you are pressured. They say, no, just sign here, and then you sign. Ask for the hard copy and go and read it so that you know what you're getting yourself into, whether you're negotiating or whether it's a new application. Just read through what you are signing.
Read, guys. One last question for Nomfundo before she leaves us. So the question is, what happens if I changed the address without notifying my creditors?
Uh, uh,
This one. The debt doesn't go away. I think that's the only answer we have here, because I don't, in relation to debt, the debt doesn't go away. It will
and
still
they will
exist
find you. Let me
all
tell
the
you
time.
something. They will find you. It doesn't matter. They will find you. So you can change your dress and not tell them and whatnot. They will find you when they are
That
looking
one,
for you.
I can attest to it. They even find you on LinkedIn, guys. You cannot run. One thing, social
Yes.
media now, you will never be able to run away from it. So, this brings us to the end of Nomfundo's presentation. Thank you so much for coming and presenting for us and giving us a heads up on some of the things that we need to consider when it comes to car finance, mortgage, etc. We're so thankful for this information. Hopefully, going forward, a lot of people are going to take it into account because, as we can see, the interest rate is going sideways. So debts are a bit tricky for a lot of people. So we've heard that if you are in a situation where you feel like the debts are strangling you, we've got an option there. So Nomfundo is available for all of those people that probably want to create some sort of plan or, just to assess what their situation is before actually taking out a debt. If you guys want to contact her, you can just DM us or send us an email. Then we will create that chain of communication there. She's available to assist you with all of your financial advice needs as and when you'd like to get hold of her. But thank you so much, Novundo, for coming through. We really appreciate you taking the time to come talk to us today.
Thank you very much for having me. And I just want to say, guys, read, read. I know I said this. Read through your contracts. Go through your bank statement. I cannot emphasize this enough. Go through your bank statement. Do not just accept a one size fits all. Go through your bank statements, know what you're paying for, know what your bank charges is, know what is going on with your finances. Sit down alone and be honest with yourself. Can I afford this? Do I need to take this? Just because they say you qualify does not mean that you can afford it. And make have plans in place and be honest with your creditors. Do not wait for the last minute. Do not ignore the calls. Do not hang up. Do not block them. Just go to them, have a conversation with them. You'd be surprised at how understanding they actually are when you are the one that approaches them, instead of now you want to start communicating with them once they start chasing you. But yeah, other than that, thank you so much for having me, Yolanda. I really hope that I have answered some of your questions and I've shared some of the knowledge with you guys.
Thank you so much. May you have a good evening.
Thank you, thank you, thank you.
See you. So, guys, you've heard it from the horse's mouth, from a financial planner's perspective. I always told you that I don't know much about these things, or we don't know much about these. Hence, we called Nomfundo here to try and give you like a snapshot of some of the things that you should probably consider before taking out that debt. Because at this point, we're at a very volatile situation. So before you actually think or decide to take a debt, you want to think about how that's going to affect you. And in case you are in a situation where your debt is strangling you, the options are available. It might also be useful to talk to someone who's like Nomfundo, who understands these things so that they can advise you and direct you on some of the things that you probably should do to just make sure that as you exit that debt, you don't exit it on a negative aspect. So, guys, I hope this was helpful. Like I always say, it's not only important for you to literally think or plan for your debt when you are alive, it's also important to think about it when you pass away, which is something we specialize in. So before you drop that will, always try to have an estate planning session so that you can plan on how these debts can be covered. Because here's the thing, we do pass away, unfortunately, and we do leave a lot of debt behind. But we want to make sure at the time which anything happens, at least we have a proper plan in place. Because just imagine, if those creditors were coming for you when you were still alive, what are they going to do to your family and all of the assets that you're leaving behind? You can rest assured they are going to come for them to try and collect as much as possible because they want those debts settled. So I hope this information and this live was useful to you. And for the people that want to attend the masterclass, we've got a masterclass on trusts on the 24th, but the details will be out later this evening or tomorrow. So don't panic, we'll put out the details. Definitely thank you to Nomfundo, thank you. Guys, let me go. Thank you for coming and thank you for joining. Ramza, we appreciate that. Nomhlongwane, everybody, literally, we appreciate you being here today, and we hope this was helpful. It's love and leave you. See you when we see you. See ya.